January 2010 for many people is a new tax code. There's a new wrinkle in the tax code that creates an option that we've never had before. So for the first time, people who have income over modified adjusted gross income over $100,000 have the option in 2010, and as far as we know going forward, to actually convert their pre-tax plans at former employers or individual IRAs that they have to Roth status, which means instead of their current status, which is pre-tax, I can actually move the money, pay taxes on it, and have all future withdrawals be tax-free. But I have to pay the taxes on it now. Since it was a new opportunity in the tax law, I decided to look at it even for my own personal benefit. Then what happened is I ran through a bunch of Roth IRA conversion calculators to see what they would say about how much I should convert. And what I found was an unsophistication that was remarkable. And at that point in time, I decided this is something that needs to be looked at in closer detail. The wrinkles that make it kind of difficult are not just that I have the option to convert, but ever since Roth IRA conversions have been possible, there's been an option that's in the law that allows you to say, for instance, today, I want to convert, and then all the way until October of next year say, oops, I made a mistake, please forgive me. It's called a recharacterization option. And that combination of options, the option to convert and then the option to be forgiven for conversion, creates a very dynamic environment where you don't just make a one-day decision, you have to actually manage the decision dynamically across time. The popular advice given by most of the Roth calculators and the dialogue that's been taking place on the web with professional money managers is if you're going to convert as quickly as possible. There are flaws in the intuition. So let me give you an example. If you had taken that advice, you would have converted on January 4th of 2010. Sometime about February 8th, the S&P hit a local bottom, meaning it was out. So if you chose to go on January 8th, there was about a 7% drop to this date in February, and you were already experiencing regret. Now, should I have waited from January 4th till February 8th to make the conversion? Well, you could say it doesn't matter, because if the world is really bad by the end of the year, you'll undo either one of them. Well, wait a minute, what if the world isn't really bad? What if the world from now on is the typical world with the stock market, which is it's increasing? All right. Then the fact that I moved on January 4th takes away my option to move on February 8th. Even though either one of them can be forgiven next year, it doesn't necessarily mean that moving quickly is the best thing. The reason that you would want to recharacterize is, for instance, if you had a crash in the stock market and therefore your tax burden would have gone down, or you have a crash in your personal life and your tax rate goes to zero, or maybe not even a crash. You decide to go back for a doctoral program and you can predict your forward tax rates are now zero or very small. And so you say, wait a minute, I really shouldn't have converted that before I figured out whether I was going to go to a doctoral program. I'll wait, and then I'll wait till my taxes drop. So there are actually a lot of things that could happen in the future that would make you regret having made the conversion today. In this case, one of the things that we're concerned about is people haven't properly explained that moving quickly does actually create eliminate a timing option that with highly volatile markets, or in this case, possibly mean reverting markets, could actually be better for you to wait.